What's going on, everybody? Welcome back to the channel. It's Millennial Trade. So we did the Sunday review, and I promised you guys I was going to do this video on the dollar. I like doing these recaps or reviews, the kind of recapping my trading, recapping the day, and then maybe adding an extra video sometimes to actually talk about one particular topic that seems to be kind of working. We did a couple of those. I think it was Friday night. We talked about the whole student loan issue and maybe the article about the universities being underfunded and stuff. So we talked about that on Friday after we did the Friday recap. So adding this into the content, what will happen to the dollar in 2023? That's the big question, right? Because I'm holding cash. A lot of people are holding cash. A lot of people watching this channel are sitting on cash. A falling dollar, if it were to continue to fall, because it's had its worst month in November in like 12 years, right? But also in December, we contracted a little bit too. I think this is just sort of a pullback. If you look at the dollar, it was up, I think, nearly, I want to say 20% at one point in time. It came down about 9% recently, but it's still up big on the year. If the dollar were to continue to fall, what kind of risks towards inflation or rising commodity prices could we experience? And is this a good reason, if you're going to stay in cash, is this a good reason to start hedging the cash with metals? I think that's a thought that's in the back of my mind. It's a thought that's in the back of a lot of your minds as well. And again, this is coming from Morningstar.com. The greenback was golden for much of 2022 with the U.S. dollar riding its strongest wave higher in 2 decades. On the back of rising interest rates. But as the year draws to a close, it seems the tide is turning against the dollar. Right? A weakening dollar could complicate the already uncertain outlook for inflation. You had Morgan Stanley wealth management people saying that, we really need to watch the dollar carefully. And I'm watching it every single day. It's part of my trading routine. I'm not going short if the dollar is falling too. I need the dollar to go up if I'm really going to stay in these short scalps right now. But yeah, if you look at the dollar's performance, I will link the article in the description below. They have the chart. It's contracted, right? But from where it started back in January of 2022, when it went on this huge bull run, we've contracted maybe 30%. If it had contracted, I don't know, 60% or something like PayPal or Bitcoin, yeah, I'd be a little nervous about the dollar. But that's not the case. The dollar is contracted maybe 30, 35%. Is the dollar in a technical bear market? Perhaps. But I think I heard somewhere it was down 9% just in November. They talk about how, the currency index, so the index, the DXY, was up nearly 22% compared with the double-digit declines of stocks and bonds. So the right thing to do this year would have been to sit on cash, to sell stocks. And unfortunately, I didn't know that at the time. I've never been an active trader or investor through these interest rate hikes and all the inflation. So I didn't know that. I was buying stocks. I had my brother buy stocks. I had my father buy stocks. And we're all down big on those portfolios. It sucks. My trading account actually makes up for, I think, all of us. I've made more and probably times 5, 6. So all of their losses technically are insured by my trading account. I'm doing good things. I help my brother out with a phone. I'm helping my family out where I can. But they're down big in their stock portfolios. And it's my fault because I'm the one that's managing it. I'm calling out the stocks they should buy. But yeah, compared with the stock declines, your dollar at one point in time was up 22%, at least compared to the basket of other currencies, which is good though. The dollar higher against these other currencies means things are cheaper for us to buy, even though we're dealing with inflation. Imagine if your currency is worth less than the dollar, how many more of those currencies, right? Maybe it's the yen or the pound. How many more of those units of currency do you need to buy the same thing in American dollars where it takes less American dollars? So that's the thing to think about there. So the dollar has given back a chunk of its gains the last few months. That red-hot inflation was cooling in anticipation that the Fed would slow down the pace of the rate hikes. And again, this goes to the fact that the Fed is not going to slow down anytime soon. like in the foreseeable future. I think they might go higher than 5%. Maybe they don't, but I think they will. I think inflation is likely to continue higher. That's just my hunch. I don't think inflation is done. They ask the question, why did the dollar rise in 22? They say fueling the dollar's rally was the fastest and most aggressive series of rate hikes by the Fed in 40 years, obviously. The currency, whose moves are closely tied to the direction of interest rates, soared as foreign investors looking for higher yields and safe havens turned to U.S. treasuries and the world's reserve currency following Russia's invasion of Ukraine. The surging dollar, however, sent other world currencies tumbling, including the euro, the yen, and the British pound. So it is hurting other countries. These interest rate hikes in America that are pushing the dollar up, it is not the best thing for other countries. In fact, it's hurting other countries. And Jamie Dimon talked about this too with the surging dollar. If it continues to surge in 2023, the big banks are worried about the emerging markets. Why are they so worried about the emerging markets? Because they're invested in the emerging markets. They're building branches in the way Jamie Dimon or some of these guys, they make it kind of seem like they're being altruistic, and in some ways maybe they are. Isn't that Bankman-Fried's thing? What was it? Active altruism? I think that's what it was. Active altruism or something. Direct altruism. Anyways, Jamie Dimon, when he's talking about the emerging markets, yeah, I think he cares in some ways. But also I think the banks, JP Morgan has branches in these countries, and, they want to issue out more debt. They want to issue out more, products and programs for those local communities. So if their currency is being destroyed by the dollar, it's hard for these banks to make money. In fact, I saw something. Was it this article? Yeah, JP Morgan. Check this out. Okay. So the dollar strength has also made it more costly for developing nations to service dollar-denominated debt. And there is, 80 trillion, maybe 65 to 80 trillion dollars, that's owed in dollars throughout the world. Crazy. It's made it more costly for developing nations to service dollar-denominated debt. Big U.S.-based multinational companies saw their sales and profits thumped by currency impacts. JP Morgan Wealth Management estimates the strong dollar reduced third quarter corporate revenue growth by 4%. The surging dollar, JP Morgan, Jamie Dimon, they claim the surging dollar reduced their third quarter corporate profits by 4%. And investors lured by better valuations in overseas stocks and the promise of better returns saw their investments pummeled this year unless they hedged against the dollar. So let's move on here. I thought that was really interesting, though, right? That the banks want a weaker dollar because then their profits will be higher and their global profits. JP Morgan or Wells Fargo, these banks that have international branches, they can make more money when the dollar is not as strong. So keep that in mind. The strong dollar is good for us, it's good for Americans, but it's not good for the banks. Apparently, that's what they said. They're losing money because the dollar is doing so well. That's their words. So this is the final question here, right? And maybe the real big thing to think about. What could weaken the dollar in 2023? Well, the swift and sharp decline in recent weeks has caught the attention of market watchers. The primary catalyst behind the dollar's turn lower has been changing expectations around Fed policy in response to evidence that inflation has peaked. The primary catalyst behind the dollar's turn lower has been changing expectations around Fed policy in response to evidence that inflation has peaked. We don't have evidence that inflation has peaked. This whole statement, this is what I'm talking about with the main, the news outlets sort of double speak, and I'm going to read the sentence one more time. The primary catalyst behind the dollar's turn lower has been changing expectations, which that's so arbitrary. Who cares what the expectations are? Half the market is expecting a pivot, and it's not happening. And then they say, changing expectations around Fed policy in response to evidence that inflation has peaked. But we don't have evidence that inflation has peaked. We have evidence that it's slowed down. The rate has accelerated. People are just assuming it's peaked. How do you know this is not a pullback? Just like the dollar. How do you know this is not just a pullback and boom, we're going to go higher? Could we experience something where the dollar goes higher and inflation continue? It depends on what they do with the interest rates. In November, following a more than benign expected inflation report, the dollar recorded the biggest two-day drop since March of 2009, and for the month recorded its worst monthly performance in 12 years. But remember, we're in the bear market right now. You're going to see these bear market rallies where people go into stocks, they're selling off the dollar. And its worst performance in 12 years. Well, there's that number again, 12 divided by 2. I don't need to get on this rabbit hole right now, but there's that number again. A big factor in improving inflation reports has been falling energy costs in the past 6 months. But what's caused that? What's caused the falling energy cost? Well, the mild weather that we had in Europe, the mild weather that we had in the U.S. recently, dumping the strategic reserves. How much longer are energy costs going to remain low? Do we just have to keep dumping the reserves to keep gas down $1 or $2? To me, that doesn't seem like a sustainable strategy that's going to work into 2023 long term. But who am I? Maybe I have no idea. Cooling inflation is only one catalyst leading to dollar weakness. The other driver would be improving expectations for growth outside the U.S., particularly in China and Europe, So again, this is coming from JP Morgan Wealth Management. If these emerging markets do well and some of the other currencies against the dollar do well, maybe the yen rising because the yen's may perhaps bottomed out. It's the same thing with the pound. If these currencies start rising, that's also going to hurt the dollar. Right? For the dollar to go up, we need these other currencies to stay down. We have to short them. We have to not short them, but and this is some high level, evil George Soros level stuff here. This is what Soros does, or what he did. He traded currencies, but it wasn't just making billions of dollars trading the currencies. There's a political motive to keeping other nations' currencies lower. If you can keep their currencies lower, you cause instability, you cause political instability. And then you can, I know I'm going off on kind of a rabbit hole here, but if you were a big, huge billionaire hedge fund manager that's donating billions of dollars to the Democrats, you're probably donating lots of money to different organizations and agencies. Maybe some of these agencies are actually front groups for the intelligence community. And so this is kind of what Soros did. He shorts other nations' currencies, and he's got so many billions of dollars to do it. And it destabilizes those countries, those regions, and then you can send in the Americans and start pumping propaganda and get elections to go the way the Americans want them to go. It's a whole thing, right? So when we're thinking about currencies, you got to understand, yes, we're rooting for our dollar. I want my dollar to go up, but I recognize this is crushing other countries. But JP Morgan says that, if the second main driver, all right, besides inflation coming down and Fed pivots, the main driver besides all of that would be the emerging markets, right, and their currencies, especially the yen and Europe. So yeah, cooling inflation and then expectations for growth outside of the U.S. That's really what we're looking for in 2023, according to this article and according to JP Morgan. They talk about China a little bit, they're lifting their crazy policies over there. The Chinese yuan has strengthened on optimism surrounding the relaxation of pandemic rules. Let's see. Acknowledging that it's not made enough progress in bringing inflation down, the Fed lifted its federal funds rate this week by 50 basis points. 50 basis points to 4.25. So we're not quite at 5% yet. We got another 75 basis points to go. And puts its projected endpoint at about 5.1% by the end of next year. By the end of next year. So if we're only at 4.25 right now, that means they're going to incrementally go up to 5% if they're telling the truth, which they may not be, or they may not really know. I think it's more like that. The Fed just... you even had Alan Greenspan admitting after the crash of 2008 that they don't have a clue. The Fed doesn't have a clue. The hedge funds don't have a clue. The Wall Street doesn't have a clue. Nobody knows, right? It's like reading the stars. So, that's all I'm going to focus on here. There's other things in this article, a couple other things that Oh yeah, like what are the impacts of a weaker dollar? A potential problem posed to the Fed could be higher commodity prices, right? The dollar weakened, but that's why we're in silver and gold, right? That's why we're stacking these things in case something happens to the dollar. Let's hope it doesn't. Negative effects from a weak dollar leads to higher commodity prices, but also drives up the prices of imported goods, which adds, yeah, that's the other thing too. I was talking about this. Because our dollar is so strong, we can buy much more of the world's goods. But if our dollar is less, that means they're making more money selling us the goods, right, trading us the goods, and we're purchasing less goods because the dollar is worth less, right? So yeah, that's definitely another negative effect. You could have foreign assets doing better as well. But I think usually the S&P 500 beats all these, international or emerging markets. So yes, the dollar, right? We've got a lot of things to think about. We got to pay attention to the inflation. We need to pay attention a little bit to what JP Morgan, some of the banks are saying about the emerging markets. If the dollar rises, just recognize that the rest of the world is getting crushed and we are benefiting from it. And that's why, if you are going to benefit in this crash, it's important to, to give that back to tithe. Just look into tithing and what it is. It's extremely important, right? Extremely important. And if you're not tithing when you're poor or you don't have a lot of money, you probably won't tithe when you actually do have money. So, we want to contribute. We don't want to just destroy the world. And, this isn't just all about profits. I mean, there is a bottom line here, but you can do a lot of good with money. If you can develop capital, you can do a lot of good, no matter if the dollar's going up or down. So if the dollar does go down, those are some of the negative effects: higher prices on things, higher commodity prices, higher imported goods. Let's hope that doesn't happen in 2023, because if the dollar goes up, we're going to be getting a break, right? Even with everything that's going on, we will be especially if you're holding cash. If you have the cash, your purchasing power is going to go up. And I'm hoping in 2023, 2024, maybe like used sports car prices will come down dramatically, and I could get like a really cool car in 2024. For less than that person paid for it. We'll see how that goes. Maybe not. Maybe that's not how used car prices will go. Anyways, I hope you guys enjoyed the video. Leave your feedback down in the comment section down below. Are you holding cash? Are you not holding cash? Are you expecting the dollar to go up? Do you think there's some concern that the dollar could weaken? I would love to hear back from you guys. Follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.